Hi, I am Anna. I come from www.ntvforex.com. Dollar gaining some ground after NFP release. Raising Brexit tensions weighing on sterling analysis. http ntvforex.com news ID 14D1C797 2020 AM markets after the corrections that developed in bonds, FX, and equities earlier last week. On Friday, the focus for trading turned to the U.S. payrolls report. The U.S. job report can be labeled as solid even as employment is still far away from the pre-corona levels. August U.S. job growth slowed from 1,734K in July to 1,371K in August but was still slightly above consensus 1,350K. Monthly job creation was also supported as the government hired 240K of temporary census workers. The unemployment rate declined more than expected from 10.2% to 8.4%. This better-than-expected unemployment rate was the eye-catcher for trading. On the bond markets, the payrolls triggered quite an impressive reversal on the corrective flattening that developed earlier last week. The move started in a rather guarded fashion, but gained traction later. At the end of the day, the U.S. yields curve showed an impressive bear steepening with the 2Y yield rising 1.7 bps and the 30Y rising up to 11 bps. In this respect, the move was quite forceful, maybe a bit outsized given the content of the payrolls report. Some investor repositioning ahead of the long weekend might have been in play. Investors preparing for this week's supply is another potential explanation for the rather sharp move. German yields to some extent followed the move in the US. Yields rose between 0.3 BP 2Y and 2.3 BP 30Y. US equities continued to trade volatile after the sharp correction on Thursday. The major indices still closed with losses between 0.56% Dow up to 1.27% Nasdaq, but finished the session well off the intraday lows touched early in the session. On the FX markets, the reaction of the dollar was a bit out of line with the developments on the bond markets. The dollar temporarily gained ground immediately after the U.S. payrolls release. EUR/USD dropped from the 1.1850 area to the 1.1785 area. However, the U.S. currency couldn't hold on to its gains, despite a sharp rise in real U.S. yields. EUR/USD closed at 1.1838 from 1.1852 on Thursday. The trade-weighted dollar DXY also finished the day little changed at 92.72. USD JPY closed marginally higher at 106.24. EUR/GBP dropped to the 0.89 intraday. However, this rebound of sterling had no strong legs. Boris Saunders gave quite some dovish comments as he indicated that additional monetary stimulus will likely be needed. EUR/GBP closed at 0.8915. Asian equities are mostly trading with modest losses this morning, with Korea and Australia the exception to the rule. The dollar is gaining a few ticks. DXY €92.90 USD 1.1830 area. The yuan is holding rather strong USD 6.8320 Chinese yuan area even as US-China trade tensions continue to linger. Headlines on UK setting a new deadline for EU-UK trade deal October 15 and preparing legislation undermining the divorce deal are raising Brexit tensions and weighing on sterling. EUR/GBP is changing hands in the 0.8950 area. Later today, the echo calendar is thin and US markets are closed for the Labor Day holiday. Later this week, the ECB Thursday and the Bank of Canada Wednesday will hold a regular policy meeting. On Friday, the US CPI will be published. Bond investors will keep a close eye at US bond auction including the sale of 35 BLN of 10Y notes WED and 23 BLN of 30Y notes Thursday. News headlines: the UK is preparing new legislation that will undermine key parts of the Brexit withdrawal agreement. The UK's Internal Market Bill is designed to secure the seamless functioning of trade within the UK, including Northern Ireland after it leaves the EU's single market end of this year. But some clauses will override parts of the NI protocol that was agreed in October 2019. The bill risks poisoning the already difficult trade talks between the EU and UK. Saudi Arabia cut oil pricing for October for Asian and US buyers. It is the second consecutive month of price reductions and a sign the world's biggest exporter sees fuel demand wavering while countries grapple with coronavirus flare-ups across the globe. Brent oil 1.15% temporarily fell below $42 billion this morning. Download the full Sunrise Market Commentary. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.